While India's financial markets are feeling the heat of the escalating tensions between the US and Iran, both the Sensex and the Nifty down nearly 1.5% in morning trade today. The markets have slipped as tensions lifted crude oil prices, stoking fears of inflationary pressures. India is the world's third biggest oil consumer, and any rise in the prices of the crude oil will be detrimental for the Indian economy. The rupee has also hit its lowest level since November 14th last year and has tanked 31 paise against the US dollar, trading at $72 rupees and 11 paise. Though the weaker rupee resulted in a surge in the stock prices of Indian IT services companies that benefit from a weaker rupee as they earn the bulk of their revenues from overseas. Fears of an oil supply disruption gained ground as crude oil prices jumped to 4-month peaks, with prices up by more than 2%. Oil prices added to gains on fearing that any conflict in the region could disrupt supplies further. Brent crude futures rising to over $70 a barrel, while US crude climbed to $64.22 per barrel. The price of gold, in the meanwhile, has also hit a near 7-year high as investors flock to relatively safer commodities, that is gold, in the time of crisis. Spot gold surged 1.5% to $1,579.55 per ounce in jittery trade and reached its highest since April 2013. US-Iran tensions have led to a fall in other Asian stock markets as well. Japan's Nikkei sliding almost 2% in a sour return from holiday, while E-mini futures for the S&P 500 falling 0.5% in very choppy trade. In the currency markets too, the Japanese yen remained the favored safe harbor courtesy. Japan's massive holdings of foreign assets. Investors assume Japanese funds would repatriate their money during a true global crisis, pushing the yen higher.